The shares have dropped the most in more than a month today. You've talked about the pandemic situation remaining fluid, creating extraordinary uncertainty. But the comments around negative demand for the full year in most main markets, no doubt causing some concern for investors. How are you planning to manage that situation?
Yeah, so first of all, of course, the first half of the year saw negative demand in most markets, so it would have had to be a very significant growth in the second half to make up for that. And in the near term here, we actually see quite solid demand in most markets. So the third quarter we expect to be relatively benign. But then, of course, we're still in the middle of the pandemic with impacts on consumer behavior as well as the economy in general. So it really is an extremely uncertain environment to navigate in, and we have to remain agile and responsive to the situation. What we're optimistic about is the fact that stimulus programs so far have been very effective in driving consumer demands, and to the extent that those are extended or further programs are announced, that could mitigate the impact of the pandemic also going forward.
Right, that's interesting because in some markets, for example, the US, Jonas, there is concern that there might be some sort of fiscal cliff edge, and even in the UK as well, and you couple that with a rocketing unemployment rate and actually consumer demand doesn't start to look so robust. Plus, in China, there's been some concerns that, yes, there's a recovery, but it's more industry than consumer-led. What gives you that optimism around consumer demand, given that global picture around demand and unemployment?
Yeah, as mentioned, right now we're seeing quite positive responses to those large stimulus programs that we see in many markets. U.S., Brazil, Australia, several European markets are right now doing quite well. So indeed, we will. A lot of what happens in the second half will depend on the continuation of those effects, and of course, I guess the intent with the stimulus programs is to then sort of restart the economy and get the consumer to be going on themselves, so to speak. So hopefully, of course, that's the end result of this.
What about if a second wave of coronavirus leads to more lockdowns? The consensus in markets seems to be we're not going to go back to a full lockdown situation like we had earlier in the year. Is that your base case as well for your business?
Yeah, I would say that is the base case. For sure, we are seeing virus resurgence in many places right now, and we expect that to continue. And of course, there's a risk that escalates further. What we have seen is, of course, consumer behavior is changing. So consumers are more and more willing to shop online, and assuming that we don't see massive shutdowns of our production or supply capability, we can live through and manage through temporary shutdowns through online as well.
How is it going on the production and supply capability front?
Right now, actually, we're fully operational everywhere. Essentially, we had the last one. The country that impacted us negatively from a production perspective was Mexico, but that's now fully back up and running again.
Okay. And Jonas, we're sort of, again, going into a lot of uncertainty in the second half of the year. If you look at your different markets, where do you expect there to be underperformance and outperformance in terms of demand?
Well, I think, of course, we're concerned about some emerging markets, Middle East and Africa, where the ability of governments to stimulate demand is lower, and the pandemic seems to be accelerating. So that's probably where I'm the most concerned. Beyond that, actually, most markets right now are responding quite well to stimulus, as I mentioned before. So yeah, I would have to say Middle East and Africa is our biggest concern.
If the response to the stimulus that you've seen so far appears to or does taper off slightly towards the back half of the year, start of 2021, what do you do then, Jonas?
Well, of course, we continue to manage, and we have been very successful in managing our cost. We're managing our pricing. We're managing the mix of the products that we sell, and that has proven very effective in countering lower demand. And so we will continue to do that, really, regardless of the situation. But we are very agile in responding to changes in the market environment and our ability to produce, and we expect to continue on that path.